The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome to the Wednesday edition, not just Wednesday edition, but wonderful Wednesday edition of the Trader's Edge. Thanks so much for joining us, folks. I absolutely love being here with you, and hopefully you're off to a fantastic start of your day. If not, change it. Change it in heartbeat, because you absolutely should. There is no reason not to have a fantastic date. We're going to take a look at the charts. I'm absolutely going to teach you something that doesn't matter what level of experience you're coming from, whether today's the first day that you've just tuned into us, and if you have, what you should do is you should certainly go to TigerTV, or if you're listening on the radio, thanks so much for doing that. We really do appreciate everyone listening, no matter how you do it. You can always catch the archive of this show on Channel 9 on Tiger TV. Just go to the homepage at TFNN.com. Click on the Tiger TV button. You can click on Channel 9. You'll be able to catch the archive of this show or any of the other ones that they store up there. And they don't last forever. So you should go catch those shows as soon as you can, because you're absolutely going to learn something, whether it's from me, whether it's one of the other contributors. And it is Wonderful Wednesday. Because after this show, you've got Tom and I doing the Money Masters. Then we go up to Newton, Mass, to our man Basil Chapman. We get to go to the North Shore, because he is north of here. And we get to ride those big waves, those big Chapman waves. And then from there, that wave takes you all the way to Phoenix, to Tucson, Arizona, where we get to go into the mountains with Larry Pesavento. We get to join him on his ranch each and every Monday, Wednesday, and Thursday. So we'll go out to Larry. And then, let's see, with it being Wednesday, we come all the way back here, and we go Wednesday. It's David White, who is the Power Law Vector Indicator man. And folks, I can't wait for you to get access to the art of the chart. Absolutely fantastic software out there. And David is on from 3 to 4, the warm-up band for the Tom O'Brien Show. Now, many things for us to talk about today in these markets, but what I could say is welcome. What were you doing Sunday night at around 6:30 in the evening? Because I can tell you, if you weren't looking at a chart, and you would think right now with the futures being down, let's see, you got the Dow futures off 105, you got the S&P futures off 14, and you'd have the NASDAQ futures off 26, the Russell off about 10. Well, welcome to Sunday evening at 6:30, folks. Sunday evening at 6:30. Right now, the ES Mini was trading just at about where it is right at this moment. In fact, at 6:30-ish or so, between the 6:30 and 7 p.m. time frame, it was putting in one of Steve's favorite candle patterns out there. It was putting in the hammer candle. And right now, well, that hammer candle is not really being tested. It's the one that took place yesterday as Tom and I had finished. We finished our show, so it was during Kate Stalter's show every Tuesday and Thursday from 11 to 11:30 doing the small cap roundup. And you had another hammer candle come in just as it was really tested. It didn't get to test the lows, but it certainly got down into that 7 p.m. candle. And you want to understand your hammer candles, or certainly my hammer candles. I think you should take ownership of those as well. It'll help you to understand what's going on in the marketplace, just as understanding the A to B equals CD patterns. Because right now, all that the ES Mini is doing, it's doing a one-to-one A to B equals CD. And I, folks, am teaching you how to buy and sell the D points. Received a bunch of emails from folks that were new to charting. They really wanted to take ownership of their lives. They wanted to understand how to read a chart. In this case here, I consider it also to be a triptych. I'm originally from Detroit, and, we used to always go to AAA and get those triptychs when we wanted to take a tour, and that's really what, or take a vacation, and that's what really these charts are all about. It's a triptych. It gives you an idea of where you've come from, what detours to be able to look for as the markets are going down. It helps you to understand support and resistance, and, the email said that folks didn't really understand what an A to B equals CD pattern. They said, well, how can you teach me how to buy and sell the D point if I don't know where the A point is? And we take a lot for granted. You shouldn't do that, and that's a great question. And so when we take a look at charts here, folks, let me try to, there's the most rapid way to learn. And if you're trying to teach somebody something, and you should write this down, you should make sure that what you're always trying to do, what I should always be trying to do, and sometimes I overlook it, we all overlook it. And what you should always do is link the known to the unknown. The more that you can link the known, what somebody knows, to something that's unknown, that's what's going to create rapid learning. That's really what the one-day workshop that I'm doing next week on Friday. It doesn't matter whether you attend that workshop or not. You should if you really want to understand what I think is the absolute best pattern that is out there. I mean, if I were going to start back over with technical trading, I wish that somebody would be teaching me this. I could have saved thousands of hours, thousands of dollars an hour. How about that? Didn't even know that I was a poet. And so, so this is where I want to start. What I'm going to be teaching folks and what you should learn and we take a look at it on a day-by-day basis. We take a look around here, buying and selling the D point. Well, the A point, if you look at it like this. When the tide goes in, when the tide comes in, what does it do next? Goes out, right? Tide comes in, tide goes out. How long has it been doing that, folks? Basically forever. At least for the last 6,000 years or so that that have been recorded. Now, when it gets dark, what happens next? It gets light, right? Patterns that exist out there. Tide comes in, tide goes out. It gets dark, it gets light. After winter, right? We're just finishing up the winter season. Of course, maybe not so much so here in Florida, although yes, it was the winter season. After winter comes what? Spring. It does that all the time, no matter what. It's been doing that for 6,000 years. On a chart, folks, what happens is you have an A to B equals C to D. How often does that happen? And when does after the C point, what are you going to get? You're going to get the D point. Happens all the time. That's what I want to be able to teach you an expert of, is how to be an expert of that C to D leg. Why? And why that? Why am I trying to teach an expert to be that versus A to B equal or the C point? The reason is because you can let the market give you those 3 points ahead of time. You let the market do 75% of the work for you. That's really what, you control the chart. You control the market. You control your trade. Let the market do 75% of the work for you. An A point is nothing more. We got the ES Mini on the screen here. Works on every time frame. So hopefully what you're doing is you are watching the charts with me. And I'm going to go ahead and blow this up. So let's go back to the high that came in last night at 4 p.m. So as we were coming into the market close, remember, folks, this is a 30-minute chart. And that A point is where you see an immediate change in trend. So the market was moving up into the close yesterday, and then all of a sudden you have an immediate change in trend. That is like that's like a major intersection. For me, that's the easiest way to describe it. When you drive down the road, you come up to a stoplight, or you come up to an intersection with a light. Sometimes it's green, you go through it. Sometimes it's yellow, you have a caution, and sometimes it's red, you totally stop, and maybe you make a turn. Well, in the charting software, in the charting system, in your chart package that you take a look at, those are your major intersections. Your major intersections is where you come to a stoplight and you make a turn. That's exactly what the market did here. And when you make that turn, you mark that intersection as your A point. In this case here on the ES Mini chart on the 30-minute, it was 4 p.m. last night when it made a high of 1362.25. Hopefully my eyes are reading okay here. 1362.25. That was your A point. So let the market's already made your A point for you. Now your B point's going to be just like your A. The next major intersection, the next possible stoplight that you come to. And where was that? Well, that was the B point that was made at midnight. If you were up at the stroke of midnight, you had the ES Mini trade down to a low of 1350.25. And then what did it do? Made a little turn. Made a turn where it was going to go ahead and make the C point. Now, you don't know where the C point's going to end. You don't even have to know where the C point is going to end. I'm not teaching you to be, there's others that will teach you that. Absolutely. I'm not going to teach you how to become the master of the B to C leg. What I'm going to tell you, though, is you want to understand what type of retracement is there. But let's just talk about A, B equals C, D. So the next major intersection that the market came to on the 30-minute chart came in at 2:30 in the morning when the ES Mini traded up to 1357 even Steven. That, folks, then the market started moving down. It gave us 75% of the clues that were out there. 75%. What kind of advantage is that to you, folks? I've owned a lot of businesses. And originally, as an entrepreneur, as a business, what we were always looking for was a competitive advantage, right? I think when you take a look at the stock market, when you let the market give you 75% of the information, the A to B to C, that's not a competitive advantage, folks. That's an unfair advantage. And an unfair advantage, that is a cool thing to have in your pocket. That's why I want to teach you how to buy and sell the D point. If we take a look at that one-to-one A to B equals C to D, and if you were an expert on understanding that C to D leg, what you would know is that there was a excellent chance here that when the ES Mini got down to 1345, and what it did was it got down to really a low of 1343.25. When it got down there, that it's possible that we might see the next intersection come in. Now, What I teach you, though, is to wait. I teach you how to wait and let the market reveal that to you, folks. And that's really where the unfair advantage, where the competitive advantage shifts over to the unfair advantage. And that's what you want to have in your trading arsenal. Of course, never, ever, ever dismiss those Steve hammer candles that are out there. And right now, that's really what is being tested on the ES Mini. We'll see if they're going to hold. It's a great release of information. It's why when the pattern completes, I tell you to pause. I tell you to get a second opinion out there. Let the market confirm it. Let it tell you, because you want to be cool hand Luke out there, or whoever else it is you want to be when it comes to being cool. Time flies here, folks. When we get back, we'll go take a look at what was released in earnings earlier this morning or late last night, like Chiquita brands. Everybody's eating bananas because they're up 26% in the pre-market. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. And jumping this morning, SodaStream, S-O-D-A. That is a damaged stock, as I recall. They closed out at $29.19 last night. They're trading up $10 this morning at $38.19. We'll go take a look at that as the market opens. But let's go take a look at those folks that have released information, earnings. As I mentioned to you, Chiquita Brands, CQB. Everybody must be eating a banana out there. I know I had my banana this morning. They closed out at $8.02 last night. Oh, and did I say they were trading up? I must have said they were trading up. I apologize if I did. They're trading down 29%. They closed out at 8.02, trading out at 5.66. Apparently, I'm the only one eating a banana out there. And so everybody, that's going to, we'll go take a look at Chiquita Brand, see where that is actually trading down into. Right behind Chiquita, STEC, Steck Inc. We can go take a look and see what they do, but they are trading down about 13% this morning. They're trading out at 670. They closed out at 770 last night. You have Gulfport Energy, GPOR is the ticker symbol on that, trading out at 2098. They closed out at 2313. That's down a whopping 9%. You got Savient Pharmaceuticals, SVNT. They are trading down about 9%. Their last trade fired off at $1.66. They closed out at $1.82. They had a loss per share of 49 cents there versus 19 cents from the prior quarter. Their net sales $3.5 million versus $1.2 million. There's a company that is thinking that maybe, I think their costs are maybe a little out of control. You got Mercado Libre, MELI. They released earnings. Let's see, what do they have here? They are trading down this morning. That is one, it's trading down about 7%. That's one of the IBD 50 stocks out there. They last fired off at 82.25. Let's see, what do they have here? They had a net income of $19 million versus $14 million. They had Q1 revenue of 83 versus 61. So not too bad there. Must be the outlook that the street is not digging. That's Mercado Libre. You've got Aeterna Zenteris. Don't know if I really pronounced that right. AEZS. They are off about 6% this morning. I don't even want to look at that. That was a 59-cent stock, so let's not look at that. Let's see. What else can we take? Macy's. Macy's is trading down 5% this morning. They closed out at $39.51. $37.50 is what their last trade fired off at. Let's go see. What do we have on Macy's here? Macy's did net income of $181 million versus $131. Not too bad for a retail store. They did Q1 sales of $6 billion versus 5.8, 6.14 billion versus 5.8. Not too bad there. Let's see, their same store sales were up 4.4%. So what is it that the street is not digging about Macy's? Must be their outlook coming up for their next quarter. Again, they're trading down about 5.5% even. You've got Kinross Gold, KGC. I know that's one that folks talk about. That is trading off another 4% this morning. Closed out at 778, down at 747 right now. What else do we have to the downside that folks might follow before we go to the upside? Teva Pharmaceuticals. Teva Pharmaceuticals, they're trading down 3%. They closed out at 44.47. They're trading out at 43.45 in the pre-market. Let's see here. Total revenue is $55.1 billion, which was up 25%, but the market's still not digging their results. Let's go take a look and see what's popping to the upside this morning. Popping to the upside, you've got Evolving Systems, EVOL. They had Q1 revenue increased by 10% to $5.9 million. They just traded at $660, closed out at $563. You got Broadwind Energy, BWEN. They're trading up 16%. Not even going to pay attention to 38-cent stock, trading at 44. Guess I should look at that first. Internal Leisure, they're up 2%. Not really, they're up 10%. I take that back. Internal Leisure, IILG is their ticker symbol. Their net income here, let's see, what is their net? Well, their earnings per share, 27 cents versus 23. Revenues of $126.7 million versus $117 million. How about Nile, Blue Nile Inc.? Any of you guys ever buy a diamond from Blue Nile? Well, they are. Some folks are, because they're trading up 8%. 27.28 is what they closed at. They're up to 29.45 in the pre-market. Their profit plunged, though. How about that? Their profit plunged, and they're trading up. When we get back, folks, we're going to go see how these markets are going to drop. Let's go over to the ES Mini here real quick. Let's see what are we doing out there. So far, just rejecting Steve's hammer. But we'll see if that holds, folks. We'll be right back.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. You got the Dow off 109 points right now. You got the S&P's off 13, Composite off 30 points. The Russell 2000 down 9. They are leading the charge on the way down. The Russell right behind them is the Composite. You got Microsoft off 20 cents. You got Intel off 30 cents. Google down $6. Cisco off 4 cents. Apple trading out at 563, trying to get back to the breakout area. That's down $4 right now in the pre-market, in the open market. If we take a look at what is popping to the upside dollar-wise, you've got QSoft, QSFT, Quest Software. I don't know what I call it, QSoft. Quest Software, they're trading up $1.96. That's up about 8%. Fossil, don't get in front of Fossil, folks. That thing was absolutely tanking yesterday. Right now, it's up about 2.7%, up $2. You've got Demand Media, DMD. They're trading up, well, they were. I lost that on my screen here. Let's go to Dean Foods, DF. They're trading up $1. That's up 8%. First California. Sounds like a bank to me. FCAL is the ticker symbol there. They are trading up about 19%, up $1.09. Maybe we'll take a look at that. You've got Disney. Disney out with numbers. Disney is trading up about 2.5%, up $1.28 right now. AOL as well out with numbers. I believe they are up, or maybe they're coming out with numbers after the bell. Let's see. Nope, they are out with, or they did come out with numbers. They're up about 3.5%. They're up 92%. Ingersoll Rand, ticker symbol IR. They are up about 1.5%. Tempur-Pedic. Everybody's, have you tried sleeping on one of those Tempur-Pedic beds? I tried it, and the foam just didn't, I know you could dance on there. You could put a glass of wine and dance on your bed, and that actually would work pretty well for me, but I just simply didn't get the, that same comfy feeling in a Posturepedic mattress. So, but they're trading up this morning, so apparently you got folks that certainly do like the Posturepedic. TPX, that's their ticker symbol. They're up $1. Or they're up 67 cents, 1.4%. On the way down, leading on the way down, Mercado Libre, MELI, that's down 10%. They're down $9 right now. CF Industries, they're off 4%, down $8. Apple down almost $4. That's about 0.6%. You've got Vertex Pharmaceuticals, VRTX. They're off 4%. Chiquita Brands, as we covered earlier, down 36%. Let's go take a look at Wynn Resorts as well, down a couple of points. Let's go take a look at Chiquita Brands. Let's take up, let's see what they are doing. You got their ticker symbol here is CQB. And let's see here. Why am I having, I'm not going to do this again today, am I? $5.11. All right, let's see if I can possibly, don't know why I'm having some data feed problems. It's just the way that the universe wants to see how badly is it that I want to provide you with good current information. And I would say pretty darn badly, folks. Let's see here if that maybe helps to, there we go. Now we've got it. Oh, baby, got to love it. Okay, so you got Chiquita Brands trading out right now at $5.36. That is coming into the swing point. where it last gapped down. Let's put this on a weekly chart. Might be a little bit easier for us to take a look at. I know it will be easier for me, so it makes sense it would be easier for you. Chiquita Brands made a swing point, high volume swing point. That's why you want to really pay attention to these high volume lows, right? So you go back to February 27, 2009, the week of February 27, 2009. How about that? Where were you then? Well, I can tell you where Chiquita Brands was down to a low of 454 on 15 million shares. Made a little bit lower low the following week as it came into that March 6th week. Did it with 5.7 million shares. Right now, you are trading inside that February 27th swing point. Again, so far this week, you don't have the volume, but today it's an early day, and you do have some volume. Let's switch back over to the daily chart. So now we know where Chiquita Brands is going, and we also know that when it was up at these highs, compared to the volume at the lows, it wasn't really doing anything. Let's take a look at the ABC Downs. Oh, how about this? Wow. Chiquita Brands basically is going to trade let me just refresh this screen just in case. Looks like Chiquita Brands is going to trade all the way down to its, okay, there we go. Look, oh, there's a nasty look. Let's put that back on a weekly basis. Holy cow. That is a weekly basis. Let's put that on a monthly basis. That is, that's kind of amazing, isn't it, folks? Chiquita Brands was trading all the way up at $31.09. That looks like that's its all-time high when it was up at $31.09. That was the month of July 2005. And now trade out at $5.38. And what it's going to head down to, folks, going to head all the way back to $4.32. Basically, if you were in Chiquita Brands, there's very few people that are in the money. In fact, the only folks really in the money on this thing are some folks maybe from the March 5th, March 6th time frame in 2009. Pretty incredible, isn't it, folks? Let's go. Got a request in the den to go look at the SPY. So we can go take a look at the SPY out there. That is the ETF for the S&P 500, folks. As soon as I can find it here on my screen, we can go. So we're going to go take a look at the daily chart on the SPY first. Let's go ahead and pull that up, see what it actually did yesterday. So if we take a look at the SPY here, let me get rid of some of the stuff that is on this chart here that I don't have to really pay attention to. Let's get rid of that formation. Let's get rid of that line that's out there. Maybe just clean it up, at least for me. Okay, so what can we say about the SPY? Number one, we know that March 6th is an important area. March 6th was when we had the first downdraft really with any kind of significance in really going back to November, December time frame. The SPY on March the 6th came down with 201 million shares. The next time that the SPY came down with even more volume, which was April the 10th, when it came down with 235 million shares. So let's go take a look and see what the SPY did yesterday, what the SPY is doing today. This is what I like to do. I like to go ahead and take a look at the key swing points. Remember, the swing points are those major intersections where you see a change in trend. In this case here, what I would do is I'd take a look at the SPY on the top of the swing point and draw just simply a straight line going across. I'd also do it on the bottom. Now, what I would also do, folks, hopefully you have this on your screen, on your charting software, you would have the volume, because you want to understand what's the volume as you're coming into those swing points. And what you can see here, just if we take a look at yesterday, the SPY rejected price, but it did it with volume. From a bullish standpoint, you want to see it reject price with lighter volume. From a bearish standpoint, you want to see it come into a swing point with volume. Well, that's what it did. It only makes sense then that it would be tested today. So now it didn't get to the swing point low. It only tested the swing point high. So you're testing the swing point high with volume. What you really want from a bullish or bearish sign, just simply to give you some information, is that test of the bottom. Now, from the bearish standpoint, you want to see it close below 134.36, and you'd love to see it do it with more than 201 million shares. Well, really, you'd like to really see it do it with more than 235 million shares that you had yesterday. Well, what did you do yesterday? Did I say yesterday? The 235 million shares was April the 10th. What did you do yesterday? You did 213 million shares. So the SPYs, we'll have to see. It's only been trading here for 12 minutes, so I'm not going to do a volume calculation with only 12 minutes gone in the day. But yesterday you did reject price, and by closing above both March 6th, you also closed above the $235 million downdraft from April the 10th. Right now, trading at 135.39. So you need to really be patient and let the SPYs give you some additional information. If we go take a look at just the daily chart, not the daily, 5-minute chart here on the SPYs, let's see what's happening volume-wise here. Let's see, was there some major volume that dropped out of it this morning as it opened? And the answer is no. The SPYs gapped down this morning. First 5 minutes, 3.7 million shares. Let's see, yesterday when you had a gap down in the first 5 minutes, you had 3.1 million shares during its move down. So not really a whole lot of information here. So let's do this. Because we can do this, folks. What we can do is we can take a look at, just simply on a 5-minute chart, the actual swing point low from yesterday. So I'm going to do that. I'm going to do the same thing on the 5-minute chart that we did on the daily chart. And that means I'm going to go take a look at the swing point. I'm going to establish the swing point, that major intersection. I'm going to draw a line at the top and bottom. I'm going to then go do that from the volume standpoint, and you should be doing this with your charting software package so you can understand what's going on. So yesterday, when the swing point low was being made, it was being made with 4.1 million shares. It was done at 11:15 on a 5-minute chart. What did you do so far this morning? When you opened up, you came down with 3.7 million shares, rejected that both on price and volume. Now you have it. And then in the following session, you tested again, 3.4 million shares. That was going into the that was going into the 4.1 million shares. Doesn't mean to confuse you there. So right now you have rejected that area. Let's just switch that over to a 10-minute chart because we are 14 minutes into the trading session. So let's go tear this apart. Let's go take a look at that swing point on the 10-minute session. That swing point came in at 11:20. 5 minutes later, do the same thing. The top of that swing point being 135.23. Draw the line going across. We know we don't have to do it from the bottom, but I would just simply do that just so you have your lines of demarcation drawn. So we take a look at on the 10-minute chart. Well, the 10-minute chart, you made that low with 6.7 million shares. When the first 10 minutes, you did 7.1 million shares. So you still have volume down there on the 10-minute chart. That says you're going to go down there and at least tag the high at 135.29. More likely, going to go back and test the high of the 11:20 a.m. swing point. That was 135.23. What you really want to see is you want to see a test of the low. But bullish or bearish, just simply to give you the information. So hopefully that covers the SPY for our requester in the den, folks. And, there's the easiest way. If you are really trying to learn, and it's great that you tune in to all of us here at TFNN, but there's no better place to be able to do that than in the Tiger Den. So go to the homepage at TFNN.com. Click on the button there. There should be a button there for you can try the Tiger's Den for 30 days for free. And that's where I would start, folks, because you want to make sure that you always have a great peer group. Let's go and take a look at the index. I want to take a look at the NYSE because what occurred yesterday is really, really, really important. Why? Because we had one of, we can call them Steve's hammer candles. And this was a Type 3 hammer candle made in the NYSE yesterday. For my subscribers, my clients, they have a record of all of the other hammer candles going back for the last 3 or 4 years, and they know the results of it and what we'll do. And these are leading indicators. There's a lot of great information out there. You can see that hammer candle. Right now, what you really have taking place, you have what I'll call a semi-version, not a perfect version, but a pretty decent version of a 3 drive to a bottom pattern here. And we'll take a look at that. That would be our first drive, would be that March 6th low, right? Market drives down to a low, then moves up into the March 19th area, makes that next low down on April 10th, and now today, and what it's done here is, in essence, it's made a 1.272 expansion off of the March 6th low. And you can see here it's almost really outstanding. Almost, I was going to use that word perfect. We don't like to use that word perfect. Now, when you're making 3 drive to patterns, either to the top side, a 3 drive to the top, or a 3 drive to the bottom, what you really like to see those things coming in at is some other support or resistance areas. We call those retracements. Well, if you take a look at the last, if we take a look at the last major intersection or if I take a look at it on the New York, NYA, New York Stock Exchange, we go back to December 19th when it made a low of 71.29. So if we just simply take our retracement tool from there, from that bottom of that low all the way up to the high that was put in on March the 19th, what you will see is right now you're trading below that 0.382 area, so you're kind of in mid-stroke. Now, if you go back and you take a look at the next important low that was out there, that's the one that we take a look at from November 25th. That's the perhaps more important one than that December set of swing points. And you can see here on the NYSE what it did was it made a Gartley sell pattern, a 0.786 Gartley sell pattern. Now we've got this little 3 drive to a bottom pattern that's forming. And if we take a look and we go take a look at our retracement from the low of that November 25th area on the New York Stock Exchange, you were at 68.98. All the way up to the high that was put in again on March 19th. What you're going to see is this 3 drive is coming right in to the 0.382 retracement area, that dead cat bounce, if you will, that normal retracement that you would get to. Looks like the exact number is 77.81 and a little bit of change. What did it trade down to? 77.81. What it traded down to so far is 77.74. That is on the New York Stock Exchange. But I can tell you, folks, you want to be paying attention to where price closes on the New York Stock Exchange today because of that hammer candle. You absolutely do. Let's go take a look at the King, because the King is absolutely in the building. The King will be here in about 12 minutes or so when we do the Money Master show. King dollar, folks, making a 100% move of a move. We're trying to complete that pattern. You're trading inside the April 6th swing point. 80.38 is the number. King dollar has gotten up to a high of $80.32. When you make a 100% move of a move, typically you start to do something else. Maybe you gather some strength, you trade sideways, maybe you do a little bit of a retracement, and that is what the King is doing. Well, that means the Queen must be doing something similar, only the Queen is a little bit worse off. The Queen, continuing with its A to B equals CD down, the 1-to-1 is going to take it into that 129 even area, maybe. We'll be right back, folks. 877-927-6648. Yeah, I got it. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at tfnn.com. Sign up today, because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get him, folks.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. When we started, right now you got the Dow trading off 122, S&P's off 14, Composite off 27, small cap still leading the charge on the way down 1.3%. New York Stock Exchange, though, down 1.4%. NASDAQ NDX 100 off 0.7% so far. Now, when I started off this show, was talking about really trying to link the known to the unknown. And, one of the questions that I asked was, what season follows winter? Right? You got winter, spring, summer, fall. And what happens when you get into that springtime, folks, it's like anything else in life. If you pause, if you just simply linger, time can pass you by. And you can't get back time. I promise you, you can get back money. You can do it. You can do it in a heartbeat. But what you can't get back is time. And so when it comes to spring, it's not the time to lollygag. It's not the time to really ponder, because you just simply can't get it back. What spring is all about, it's all about growth. It's all about planting seeds. It's all about putting seeds in the soil. It's about watering the seeds. It's about taking action. What kind of action? Yes, massive action. So what I would suggest is that if it doesn't matter what level that you're coming from. If you are just brand new to charting, then this is absolutely where you want to start out. You want to learn the A to B equals CD. You want to become an expert of that C to D leg. Right now, if you're becoming an expert of that C to D leg, you'd be taking a look at the DAX out here. And the DAX right now is trading inside, and this is important, trading inside the October 28th swing point. Not only are we taking a look at A to B equals C to D, but we're using our triptych, and we're taking a look at the detour signs that are out there, or the signs that say lower prices coming at you. The DAX, the high on that swing point from October 28th on the DAX is 64.30. You're trading out at 64.05.93 right now. Yesterday, you tested it. The day before you tested October 27th, you close inside there. That just sets up, not only testing the bottom of that swing point, but it tests up completing the 1 to 1.272, more likely 1 to 1.618, A to B equals CD, and there's reasons why I can tell you it's not going to make just a 1-to-1, and it's going to go down even further. That 1 to 1.618, folks, comes in at the 58.17 mark, maybe 750 mark. So that would be your range, even though it's a 50, 60 point range out there. Let's go back and take a look at the SPYs. Let's go take a look at, we started off taking a look at that a few minutes ago, and let's take a look at the first, we'll start off with the shorter-term chart out there. So, again, you can see that on the 10-minute chart, as the SPYs came into the swing point, that swing point was going back to 1120 at 6.7 million. In the open, it did 7.1 million, said, hey, you're going to be back down there. The second 10 minutes was 7.8 million right now. That's why you want to draw the bottom of this line here, because it'll help you to understand what's going on. Right now, what the SPYs are trying to do is test the low of yesterday's swing point. That low, folks, is 134.92. You're 134.97. You've got 3 minutes left in this trading session. 4.6 million shares going against the 6.7 million shares. So, it looks like it might have touched it. Let's see. The low, 134.93 is what it got down to, and 134.92 is where it needed to get to. How do you like that? Stop 1 penny so far. That's not a good sign when you stop just 1 penny, but there's still, as I said, about 2.5 minutes left. That is on the SPY. Let's go take a look at the other ETF. Let's go ahead and shorten this up. Let's go see what's going on with the small caps. Let's look at the IWM out there. Let's go take a look at the IWM. Again, I got the 5-minute chart, but since we got the Money Master show coming up, and Tom looks at all the 10-minute charts out there, let's go take a look at the 10-minute chart on the small cap, see what it's doing. It's coming into a hammer candle as well, folks. The low on that is 77.97. You're trading at 78.08. Stay tuned. Tom and I will be up next. Then we go to Basil Chapman up in Newton, Masson. Not sure who's doing Larry's show. I know he's going to take one more day off. Thanks for being here, folks. Have a great Wednesday.